Good evening, ladies and gentlemen. It's my pleasure to welcome you all to the post-results teleconference for the first quarter ended June 30th, 2025. For today's call, we have with us Dr. Sharvil Patel, Managing Director, Mr. Nitin Parikh, CFO, Mr. Tushar Shroff, President, Corporate Finance, Mr. Arvind Bothra, Head of Investor Relations, and Mr. Alok Garg from the Managing Director's Office. To begin with, let me now give you a broad overview of the developments during the quarter. We commenced FY26 on a strong note, following a formidable base of FY25. We delivered a stable revenue growth during the quarter, with most key businesses performing well. Our US formulations business sustained execution excellence, delivering both sequential and year-on-year growth on a high base. On the India geography front, our branded formulations business in India sustained the growth momentum, outpacing the market growth for yet another quarter. The business has consistently outperformed the market growth in the last couple of years. Consumer wellness business navigated through the challenges posed by early monsoon conditions, which impacted the seasonal brands. However, the non-seasonal portfolio remained resilient, cushioning the overall performance. International markets formulations business delivered yet another strong growth performance seen over last several quarters, driven by all-round growth across key geographies, reflecting a good diversity of performance. With that, let me take you to the financial numbers for the quarter gone by. We registered consolidated revenues of 65.7 billion rupees, up 6% on a year-on-year basis. Our operating profitability continued to remain strong, with an EBITDA margin of 31.8% during the quarter. Consequently, EBITDA for the quarter stood at 20.9 billion rupees. Net profit for the quarter was 14.7 billion rupees, up 3% year-on-year. Aided by strong profitability, our balance sheet strengthened further, with a net cash position of 56.3 billion rupees as at 30th June 2025, against the net cash of 48.8 billion rupees as at 31st March 2025. Now, let me take you through the operating highlights for the first quarter of FY26 for our key business segments. The US business registered revenues of 31.8 billion rupees during the quarter, up 3% year-on-year and 2% quarter-on-quarter. We filed 3 NDAs, received 6 approvals, including 2 tentative, and launched 3 new products during the quarter. Our India geography, comprising of formulations and consumer wellness business, accounted for 37% of the total revenues during the quarter and grew 6% year-on-year. As mentioned earlier, the branded formulations business in India grew faster than the market during the quarter, with 9% year-on-year growth, driven by strong uptick in pillar brands and innovation products. Chronic segment continued to grow at a faster pace, driving the overall growth of the business. In terms of therapeutic performance, the business grew faster than the market in key therapies of cardiology, respiratory, anti-infectives, pain management, and in the super specialty area of oncology. On the super specialty front, we continued to retain leadership position in the oncology therapy. Contribution of chronic portfolio has increased consistently over the last several years and stood at 43.7% as per IQVIA MAT June 2025, an improvement of 420 basis points over the last 3 years. Our consumer wellness business recorded revenues of 8.5 billion rupees, up 2% year-on-year. Excluding the seasonal brands, the business posted strong double-digit growth, reflecting the underlying strength of the portfolio and balanced business model. International markets formulations business posted revenues of 7.3 billion rupees, with a strong year-on-year growth of 37%. The growth was well spread across different regions, as both the emerging markets and Europe delivered strong demand-led growth during the quarter, benefiting from focused execution. On the medtech front, we recently completed acquisition of 85.6% stake in Amplitude Surgical. During the quarter, we entered into a strategic partnership with Braille Biomedica, an innovative cardiovascular device manufacturer in Brazil. to exclusively commercialize its transcatheter aortic valve implantation, which is TAVI technology across Europe, India, and other select markets. With this partnership, we look forward to expand into the fast-growing interventional cardiology segment. On the operations side, our API manufacturing facilities at Ankleshwar and Dabhasa received EIR from the US FDA against inspections conducted in March 2025 and April 2025, respectively. This concludes the business review. I would now request Dr. Sharvil Patel to take you through the key initiatives in our innovation program.
Thank you, Ms. Nayak, and good evening, ladies and gentlemen. It is a pleasure to have you all here today on the call. We had a steady start to FY26. All our businesses maintained the growth momentum with robust operating profitability and performed in line with expectations, except for a couple of summer-oriented brands in the consumer wellness business, which faced seasonal challenges. We stay committed to achieve our targeted top-line growth and profitability for the current financial year. This will be driven by our strategic intent of going beyond the pill to address diverse healthcare needs of the patients and also superior execution. In the US generics market, we have steadily expanded our footprint by building a robust and diversified portfolio across various dosage forms. This growth has been driven by a combination of strategic in-house development efforts and prudent licensing initiatives. To broaden access and provide diverse treatment options, we have been expanding our presence in the specialty space by enriching our portfolio of the 505(b)(2) products and enhancing our focus on the pediatric rare disease platform. Powered by robust customer relationships, a versatile network of manufacturing facilities capable of delivering a wide range array of dosage forms, and an agile and responsive supply chain, and disciplined cost management, our US business is firmly positioned to have a sustainable growth trajectory. On the India formulations front, our branded formulations business continues to outpace the market growth. Our strategic initiatives are focused on expanding our presence across targeted therapeutic areas, thereby enabling us to serve a broader patient population. We have effectively leveraged a rich and diverse portfolio of innovative products to deliver novel solutions that address critical unmet medical needs. In the consumer wellness space, we are driven by our mission to meet evolving consumer preferences and choices in the wellness domain and inspire healthier lives. Our portfolio of wellness products built over the years position us well for the future customer needs. We look forward to drive growth through innovation, scale sustainability, and serve consumers with differentiated evidence-backed wellness products. In the international markets formulations business, which comprises of different countries of emerging markets and Europe, it has emerged as a reliable third pillar of growth and continues to deliver strong double-digit growth over the last several quarters. In the emerging markets, we remain committed to satisfying diverse patient needs across chosen therapies through multiple levers. In Europe, our focus remains on expanding our offerings and enhancing the market coverage. In line with the vision of going beyond the pill to make deeper impact in patients' life, we forayed into a global biologic CDMO business through our plan to acquire Agenus Inc.'s US-based biological manufacturing facilities. Agenus Incorporated is a clinical stage immuno-oncology company committed to developing immune therapies to combat cancer. The acquisition marks our strategic investment in the US-based manufacturing for biologics, thereby adding a sustainable growth driver for the future. I'm also happy to note that we successfully completed our stake acquisition in Amplitude Surgicals in France, a European medtech leader in high-quality lower limb orthopedic technologies. Amplitude's portfolio comprises of technologically advanced products and solutions backed by cutting-edge research and innovation and complemented by robotic surgery platforms. With this acquisition, we look forward to offer numerous value-added innovations to meet the patients, surgeons, and healthcare facilities. With this, let me share some material developments on the innovation efforts during the quarter. On our NC research front, we initiated a phase 2B clinical trial of Usnoflast, a novel oral NLRP3 inflammasome inhibitor in the US. in patients with amyotrophic lateral sclerosis, commonly known as ALS. The US FDA granted fast track designation to the molecule for ALS indication during the quarter. The molecule also holds an orphan drug designation from the US FDA for this indication. In the biotech R&D space, we received market authorization approvals from the drug regulator for rituximab and aflibercept biosimilars. We also received regulatory approval to initiate a phase 3 clinical trial for our second antibody drug conjugate. On the vaccines R&D front, we completed a phase 2 clinical trial of hepatitis E vaccine. We also initiated a phase 4 trial of rabies vaccine to evaluate the long-term immunogenicity and safety vis-a-vis the WHO pre-qualified vaccine in animal bite cases. Thank you, and now we start with our Q&A. Over to the coordinator for the Q&A session.
Thank you, sir. Now we will open the forum for a question and answer session. Anyone who wishes to ask the question, please raise your hand from the participant tab on the screen. Please note this conference is being recorded. The first question is from Kunal Dhamesha.
Hi, can you hear me?
Yes.
Yeah. Thank you for the opportunity and congratulations on good set of numbers. The first question on the our US run rate, which is obviously good this quarter. But when we look at, let's say, beyond FY26, we had initially commented last quarter that we don't expect a sharp fall. So can you provide some more color there? How are we seeing the FY27 US revenue shaping up and some of the key products that we are expecting to launch?
So in FY26, with the price challenges on Revlimid, we still believe we will have a single-digit growth in this year. So we are maintaining our current guidance of growth in the US for FY26. And we expect to launch 30 plus products and with clearance potentially of our injectable facilities also, some more launches.
For FY27 or for FY26?
FY26.
Okay, but my question was more on FY27, so beyond, let's say, Revlimid, how are we basically planning to offset the Revlimid cliff with the kind of products that we have?
So there will be, obviously, we continue to have important launches in FY27 also. Ibrance as well as the other two molecules where we believe we will have decent launches. Also, our 505(b)(2) scale-up is going to be seen in FY26 end, but more so in FY27. So that will substantially add to the business. And we're quite excited with that prospects, especially with our 505(b)(2). We have almost 25 product pipeline with 15 products that have already been filed and future products that are to be filed. So that is also going to create a long-term differentiated portfolio for the organization.
Sure. So shall we expect like FY27 to be more flattish growth or?
I think it's still early to tell because we have to see many things play out. But as I said, the pipeline wise, we have exclusive launches. We have a 505(b)(2) program that will scale up. So we are quite, and obviously regular products of 20 to 30 launches every year. So we believe all of that will aid to the growth. But I think better clarity we can give only probably end of the fourth quarter once we are clear about what will be the current status.
Sure. Thank you for that. And my second question is on Saroglitazar. If you could provide an update there, how the trials are progressing, whether was there any interim clinical trial data readout, which was, you have seen interim data, etc. How does it? And then on the timeline of launches, I think we have suggested late FY27 or early FY28. But how are we looking on those timelines?
So I think it's the same as nothing has changed. I think we are looking, we have completed a trial. The last patient readout is also done. So we will wait for the data to be seen in the next quarter. And if the data looks promising, which we hope, then we will be going for a NDA filing and and if all that goes well, then in FY27, we'll see a launch for Saro.
Sure. So data, just the last bit, the data is already there and it's being analyzed, is what you are suggesting?
No, it's under lock right now. So once everything is done, then we'll be able to unlock data and do a readout. So we are saying it'll be in the second end or third quarter beginning.
Okay, sure, sure. Thank you and all the best.
Thank you. The next question is from Bino.
Hi.
Hello.
Hi. Can you hear me?
Yes, I can hear you.
Okay, great. Shalin bhai, could you also comment on mirror background? First of all, in this quarter, has it been pretty much similar levels as last 2-3 quarters? And is it likely to continue for the time being?
Sir, Revlimid and Mira background, two special products, in totality, are more or less the same kind of sales.
Okay. And has it changed significantly for Q to 1Q or more or less similar continuing?
More or less similar.
Okay, got it. And what is the outlook for Mira background? Of course, litigation is pending, but when you look forward into FY27, do you see this continuing in FY27 or it is highly unlikely that it stays in FY27?
So we'll have to wait for the trial before we can comment on that. So I think, as I said, the trial date is in February 2026. So only post that we can give any more comments on that. Until then, we do continue to commercialize the product.
So what is the best outcome of the trial? That the product continues to be under patent, you will be uninfringing, and only the current two players will stay for 3-4 years. Is that such a
I
outcome?
think it would be very difficult to speculate what outcomes can be. So I would not do that right now. We'll have to wait till then. I said until then, we know we are commercialize the product.
Got it. Another question about these two facilities which you have acquired. One is the Genus One in California, and the earlier acquisition in India of the Sterling Bio facility. When can we look at some sort of meaningful scale up in these facilities? So you have paid a decent quantum of money, even if one applies 1.5-2 times. As a turnover, still it could be $100-200 million revenue coming from these kind of facilities. When can we see this kind of revenue?
So on the second facility, with the biocDMO facility that we have acquired in US, it is under qualification. It's a brand new facility which is under qualification, and once it's qualified, it is going to produce bot-bal for Agenus, and there is a contract for them for the next 3 years to produce bot-bal. Beyond that, we will be looking to bring more biocDMO manufacturing into this facility, and also potentially bring some biosimilar manufacturing. So that's the current plan. So I would say it's probably at least a 2.5-year, 3-year plan before we'll see large, capacity utilization and revenue uptick. With respect to our other joint venture, which we have with for the Sterling Biotech facility, it has we are a large capex program going on to build I would say world's first recombinant whey protein manufacturing at scales that have never been made in the world. So we are making large scale manufacturing for the whey protein and or whey isolate through fermentation, and that program will see probably in the next 2 years we would see commercialization kick in. So it's nothing in the short term for both of these facilities.
But just one point on that when you talk of Sterling Biotech, it is an existing company with sales and EBITDA, and what we have paid is for that existing business. What Sarul bhai just now mentioned is the future project that we intend to put up in the same company.
Understood. Great. I'll join back the queue. Thank you.
Thank you. The next question is from Neha Manpuria.
Yeah, thanks for taking my question. My first question is on the 505(b)(2) portfolio that you indicated would ramp up by the end of this year. Currently, we have sitagliptin. I think there was one more docetaxel that we had in licensed last year. Are there any other launches in the 505(b)(2) portfolio that is expected as we think about the next year? And how big can the 505(b)(2) portfolio be for Zydus next year?
So we have, as obviously you mentioned already, the one product that we commercialize and docetaxel, which will commercialize in the next quarter. We also have some two more 505(b)(2)s that one is about to get commercialized, one we are waiting for approval to commercialize. Over a period of time, I think the 505(b)(2) will definitely be a significant value as well as profitability driver for the specialty space, which will be more sticky. So we already have a decent revenue on 505(b)(2) with good profitability, but we are seeing a major scale up, which in the FY27 and beyond. So
besides sitagliptin, can the other portfolios also? I think Sita you'd mentioned that can be $50-odd million. So can the other products be as large as Sita, or Sita would still end up being the largest product in that portfolio?
others will be larger.
Others would be okay. And the usual ramp up for these would be similar to what we've seen in sitagliptin for the for docetaxel and the two other products that we commercialized.
No, I would say the peak for the others would be in the second or third year.
Oh, okay.
But they
Got
will
it.
have longer patent life,
Tail.
and they will not be facing generic competition that way. So.
Oh, okay. Understood. My second question is, I think in the opening remarks you mentioned about emerging market being the third pillar of growth. We've seen a significant step up in emerging market revenues this quarter. Is there any one-off that we are seeing in EM? Could you provide some color on what sort of growth we should expect, and what's driving this acceleration in growth in the emerging market business?
No, so for us, the emerging market, including US, both have driven very strong growth, and it's been broad-based across geographies. We are very confident of strong double-digit high teens to mid-20s growth going forward for the overall international markets, and we are seeing that to be sustainable.
And this the high teens to mid-20s isn't anything. I mean, there's no tender component, which is probably one-off to this year, which we don't see. I mean, there's the sticky run rate that we should assume for the emerging market business.
Yeah, we are talking about high teens to mid-20s growth for the EM for the international markets.
Okay, thank you so much.
Thank you. The next question is from Harith Ahmed.
Hi, thanks for the opportunity. Hope I'm audible.
Yes.
First question is on Asnoflast. Given it's a very promising molecule, and you talked about commencement of phase 2B trials. Can you give some more color on the timelines for phase 2B trials and the best case scenario for a launch for this product?
Yeah, so I think we're just about to initiate the trial. We have a global CRO whom we have contracted, and everything is in place. So the trial will begin in the next 1 to 2 months. It will be a 2-year kind of trial, and then post that readout. So we are talking about a 2 to 3 year window for seeing our clinical data for ALS. But it's mostly an efficacy trial, so we believe that depending on the results, we could see an approval on phase 2B, or we may have to then further do on phase 3. But high chances that if we see good data, we could go for an approval post this trial.
Okay, thanks for that. And the next one is on biosimilars. So far, we have refrained from any investments targeting regulated markets for our biosimilar portfolio. Given that we have fairly broad portfolio of around 14-15 biosimilars, is there any rethink on our regulated market strategy, or is there any plan to partner with someone who will undertake all the R&D spends and the commercialization part of it?
So we are working on both ideas. One is the regulatory scenario has changed for certain class of biosimilars. There is no longer a requirement for an efficacy trial. So the pathway has become obviously much better for both for US. The second is we have a manufacturing footprint now in the US to make biologicals. So we are looking at both opportunities in-house portfolio as well as licensing in with manufacturing in US as an opportunity to add maybe 1 to 2 products in the biosimilar space to launch. I mean, to develop and launch.
Okay, got it. And on one clarification on the Saraglitazar comment in PBC, as we await the data, and you mentioned that we'll be looking at the data before deciding on the next steps. So, what exactly are we awaiting? I mean, are we going to compare the data for Saraglitazar with some of the existing products in the market, and only if we meet the expectations versus those products, we'll be taking a call to go forward with Saraglitazar? Is that the correct understanding?
No, it's a blinded trial, so we're waiting for the efficacy as well as safety data to come out. So if both those are good and if it is comparable with the treatments of available today, we will obviously take the next step of filing for an NDA.
Got it, sir. I'll get back with you. Thanks.
Thank you. The next question is from Surya Patra. Hi Surya, are you able to hear us?
Hello.
Hello.
Can you hear me?
Yes.
Yeah. So this first question is on the Amplitude acquisition. If you can just give some more color after the acquisition, what is your thought process about it? Is there any kind of acquisition related cost that we could see in this quarter? And having done the licensing arrangement for the devices also, what is the kind of a metric thought process or the goal that we would be having going ahead? If you can.
So with the acquisition of Amplitude, obviously we become at least from an Indian context perspective, a decently important player in the med devices space. The acquisition gives us the opportunity to enter into the orthopedic implant space for knee and hip. It gives us a navigation and robotic capability as well, which is the future for all surgeries, as you see. So it gives us both those capabilities. It has a strong footprint in Europe with a strong presence in France. And what we hope to do is obviously continue to build and increase our share in these markets, but also enter and scale up markets like Australia, Brazil, Mexico, and enter more markets through both their network as well as Zydus's capabilities. Also, India offers a great opportunity to launch high technology, high end implants in India, and we will be also launching these products in India. Beyond that, we do see opportunities to improve on our profitability with looking at cost reduction through helping us improve margins. Also, on the intervention cardiology, our licensing capabilities with TAVI allows us to enter more markets, including India. We will be doing clinical trials for CE approvals for Europe as well as in India, and we hope to build an intervention cardiology business both through stents, balloons, TAVI, and future more products in this category.
And acquisition related cost, Surya, are largely booked in March quarter only.
Sure. Okay. Yeah. Thank you, sir. And second question is on the GLP opportunity. So in the emerging market that is now likely to be activated, starting with Canada, Brazil, like that, as well as in India. So if you can give some clarity about your preparedness for these markets and your ultimate plan of integrated operation here for the advanced market in the subsequent period, your plan, please.
Sure. So first, we have in semaglutide a different formulation, a formulation that gives convenience and ease of administration, and also reduces the overall burden in terms of economics. So we will be launching this new formulation in India, and we are on track to do so. And we should be present when market formation happens. So we are quite excited with that. This formulation does offer significant benefit versus the existing formulations in the market. Similarly, we are also taking this new novel formulation to the other markets like Brazil, Canada, and future other markets which will open up. So our strategy is not to go with the same but a differentiated formulation in all other markets. And we will get to see that the filings will start to happen by end of the year, and we will see maybe from a year to 2 years from then launches in different markets depending on our approval. How long does it take for the approvals to come? But right now, I think from the commercialization point of view, India will offer the most benefit to us in terms of revenue.
Okay. Sir, regards the CDMO acquisition or entry into this biologic CDMO business. So these two acquisition, these two facility acquisition obviously facilitate your foray. But is there any investment plan beyond that?
No, I think the investment plan is to get these facilities up and running and qualified and start doing business through them. We don't have any more bio CDMO expansion plans in US.
Okay, just last one on the sitagliptin. So considering the kind of a bulk supply arrangement as well as the government supply put together, is it fair to believe that this is kind of a compensating for the losses, what means revenue losses, what we have been facing in the Asacol HD in this current year, and what will happen to that revenue stream once the generic competition in sitagliptin starts?
I think so. I would say the franchise is a good product which will have business over the next couple of years. It is definitely not replacing the loss of revenue for the lenalidomide. But from a new product 505(b)(2) point of view, it's a good product which has a good NPV with at least 2 to 3 years of good earnings. So we are quite happy with that. But it doesn't replace on its own doesn't replace any earnings out.
No, I was asking about the Asacol HD revenue loss is getting compensated by this product right now this year, sir.
Asacol has gone there has been steep decline. So the revenue gap has been obviously some of this, but also so many other products that we have launched. So I would not attribute all of it to this product.
Okay. Yeah. One just clarification, sir, about the finance cost. See, we have been talking about reducing our debt and hence the finance cost, but that is still been kind of stagnated or it is remaining there only. So your some clarity on that front would be useful.
So there are two kinds of finance cost. One is because of the accounting treatment that we do for liquid acquisition, where we have to do unwinding of interest amount on the contingent payments that we need to make to the sellers. So that is one important component. I'll give you separate amounts. Utsav will provide that specific amount for that. The second is that we are having arbitrage income in terms of government securities. So we have made investment. We buy government securities. We place those government securities. Again, the securities we again borrow. So that actually helps us in terms of maximizing return on our own capital. So you would also find increase in other income in our results, and increase in other income is largely attributed to interest income. So on a net basis, there is still a gain in what we are doing. So you will have a large cash balance, and there will be some borrowings also against the government securities. On a net basis, we have net surplus only. There is no borrowing.
Okay. Sure, sir. Yeah, thank you.
Thank you. The next question is from Kunal Dhamesha.
Hi, thank you for the opportunity again. One on the medical devices business beyond, let's say, Amplitude and the in-licensing, are we planning to do any organic capex here? And if yes, what would be the amount and how will it be spread over the next couple of years?
Yeah, we are building a dialyzer facility which is under construction, and in the next 1 year we hope to get it up and running. So that is the capex that is going on. Also, some small capex on our intervention cardiology side. So between the two, we are spending around 300 crores of capex on med devices.
And that will be completed this year mainly?
No, by in probably 12 to 18 months.
Sure, sure. And then second one on the HNS facility that we have in US. Would you share the current bioreactor capacity that we have? And is it a single-use reactor or a stainless steel reactor facility?
So these are single-use bag reactors, and I think the capacity is around 2 into 4 KL, 2 KL into 4.
It's okay.
2000 KL for 4 reactors. So,
Eh,
and also we have small scale reactors also. So,
yeah. So this would be mainly mammalian cell culture reactors that
yes,
would be using.
yes.
Okay, sure, sure. And then, sir, are we looking at any cost efficiency program as we enter into post-Revlimid era? And if yes, what are the cost lines that we are looking at, and potentially how much savings we can kind of accrue over the next couple of years?
So if we do, I mean, not because of Revlimid, but over, I would say since the early 2000s, we have institutionalized cost reduction programs in the organization with Slim, Prism, and other critical initiatives. So we every year have a very strong savings target, which the team is quite good and have been surpassing those targets every year. And so that continues as our cost base goes up, both from procurement savings, same vendor negotiations, alternate vendors, improvement in efficiency in manufacturing, both from productivity as well as batch size yield. I think all of those put together, we do have savings that we achieve every year, which are meaningful. And so that will continue. By and large, on many metrics, we are sort of very good and best in class, so to say. So we hope to stay in that kind of metrics.
Sure, sir. And last one from my side. At this point in time, shall we pencil in Ibrance generic launch in FY27? Do we have that clarity from the settlement?
We have clarity, but we have to wait for if there is any a pediatric exclusivity. If not, yes, it will be a FY27 launch, late FY27 launch. If there is pediatric exclusivity, then early FY28 launch.
Sure. And so just the Ibrance, the molecule itself for the innovator has seen a significant decline this year. Do we expect once standardization happens and the low cost alternative is available, some share can be gained back?
Generally, when genericization does happen, unless the therapy has shifted, obviously you see volumes grow. But today, also, irrespective of that, it's still a very, very large opportunity. So, after genericization, generally volumes do pick up for most therapies unless there is a shift of therapy. But I would say the molecule still offers a very significant opportunity in the medium term.
Sure, sir. Thank you and all the best.
Thank you.
Thank you. The next question is from Bino.
Hi, good evening again. So just a one follow-up question on semaglutide. Are we fully integrated backwards in semaglutide, both API as well as formulation?
Yes.
Okay. And do we have sufficient capacities for India launch and the other emerging market, Canada, etc. launch over the next 2 years?
Yeah, we have planned for enough capacity. We also have alternate source on API. So we are dual sourced, and we have obviously PFF and cartridge facility sufficient of that, and obviously the devices also we have been planned for. So hopefully we are in control.
Got it. Thank you.
Thank you. The next question is from Neha Manpuria.
Yeah, just wanted to get a sense on what the capex would be given the CDMO capacity that we are setting up for the US, and you said 300 crores for the intervention. Is there anything else that we have planned? What would be the capex roughly for the year?
Total capex for the current financial year is estimated about 200 crores. That includes 300 crores of MedTech.
And the US capex also, right?
Sorry?
US.
And the US facility?
No, the acquisition is separate.
No, but there
No,
is
so
no
there is.
capex in that because that
Yeah.
facility is already, the fully capexed and it's only under
Okay, okay.
qualification now.
Okay, so there's no additional capex that is required for.
There
to
could be
build that up.
incremental small capex, but the facility is only under, now is under qualification.
Okay, got it. That is helpful. Thank you so much.
Thank you. The next question is from Devang Saraugi.
Good evening, sir.
Good evening.
I have two questions. When can desidustat be expected to receive approval from Chinese regulator, and what could be the potential revenue opportunity for this drug in Chinese market?
So I think, as I said, we have completed the clinical trials in China with our partner. The data readout was already published. We have mostly answered all our queries with the Chinese authorities. So we are hoping that in the next 12 months we would see approval for desidustat in China. From our point of view, desidustat offers a tremendously large opportunity potentially for the company. China is probably one of the largest markets for HIP inhibitors, with an existing product also which are in multi-million dollars. So we do hope for it to be a very meaningful launch and commercial opportunity for Zydus.
And sir, second, is there any change in approval timeline for CUTX-101?
No, we still are looking forward to approval in this financial year.
And sir, lastly, on the Andy robot arm from Amplitude Surgical appear to be promising. Do you have any information on the expected launch timeline and market size potential?
Yes, so it has been already applied for CE approval, and the launch will be in this financial year.
And any revenue expectations?
Yeah, there are revenue expectations built with this robot, which will improve our revenue in Europe also, and we also potentially will look to bring the robot to other markets as well after CE approval.
Any differentiation between competitors in this product?
So the good part of this is that there has been a navigation system that has been in use for many years and with strong data. So we are very excited with the capability that it has. Now with the robotic arm, also it builds additional capability. So I think we believe we will see good traction for the robot going forward. Beyond that, obviously the knee and hip joints are high tech, high quality products, and we hope to see good success of them in different markets.
Sir, if you allow, last question on tariffs. Any comment? How can it affect? Any insight?
So I don't have any comment because we don't know the extent of the tariff on pharmaceuticals or generics. So as and when we are clearer on that, we can give a better understanding. But as I said, US is an important market for us. In US, a lot of medicines are made available and affordable because of generics. Generics are almost 90% of the volume in the US. And that helps bring the healthcare costs down. So I think we are committed to making sure that we continue to create this access in the US. Once we see the tariffs, we will see the impact and work accordingly as to what we can best achieve after that.
Thank you, sir. Thank you.
Thank you. The next question is from Nitin Agarwal.
So taking my question, Sharil bhai, on the on lenalidomide, for the remaining quarters, do we still have quantities that we'll intend to book, or we largely done with the quota?
We're most largely done. No, the quota we still have some left, but I think by and large we're largely done in terms of majority of our revenue. In the last, we have booked it in the last quarter.
Sure, when we look through the remaining 3 quarters for the year, when we're talking about growing on, the business that we did last year in the US, given the fact that we did have a large mirabegron, we did have a largish Q4 contribution from lenalidomide, plus the Asacol erosion which has come through this year. How do we, what sort of drivers do you see will make up for some of these things going forward?
So, as I said, we still continue the guidance of single-digit growth in the US this FY26. It will be driven obviously by the launches that we have done in the last year, the products like the 505(b)(2), which we have launched and which we are hoping to launch in the coming quarters. Also, we have base business that has done well. So while Asacol may have gone down, but overall we are gaining on our base business as well. And mirabegron also continues to be favorable. So putting all of this together, this is our, we believe that we will still see growth in spite of a last Q4 that happened where we won't see any majority business on lenalidomide.
Thanks. And Shilu, on the gross, on the EBITDA margins, how do you see the EBITDA margins versus last year?
So we believe we will be better than 26% EBITDA margins, and that's what we have maintained as a guidance.
Okay. Thank you so much.
Thank you. The next question is from Tushar Manudhane.
Oh, am I audible?
Yes.
Thanks for the opportunity, sir. So just with respect to desidustat, while maybe probably approval taking next 12 months, and then subsequently the commercial channel probably how long will that take to see that the stable or the scale up in the sales?
So we have partnered with the commercial partner in China, who's a large player in the market. And they are already preparing for commercial launch, so they are well prepared to do so. The market size of this kind of CKD molecule in China is already about $1 billion and more. So we see a great opportunity for this to take share in the Chinese market. And I think our partner is well prepared and excited to prepare for the launch. I think most of the work with the authorities is completed. And we hope that we will see approvals in the next 1 year.
And for us, it will be this like royalty kind of income, of course, including the profit share, because let's say the manufacturing and the commercial.
Yeah, it's a profit share. I mean, it's a markup plus royalty income.
So any broad range you would like to highlight, like how much this would be as a percentage?
We can't talk about it yet because we have to get pricing approvals also and other aspects. So once we commercialize it, we can give better color. But obviously, the nature of a licensing and is where we don't have any other fixed costs. So obviously, the profitability will be high.
Okay. So then just secondly on this Agenus biologics facility, with this botensilimab and balstilimab, the capacity would be largely utilized, or there would be still sufficient amount, and then what kind of products we intend to sort of get the, let's say, exhibit batches or validation done from this facility?
So for current requirements for BOT/BAL for their clinical trials, the facility is obviously far more, I mean, it has far more capacity than the production that we'll do. So we do have opportunity to add more products beyond Botbal. If Botbal goes fully commercial and the uptake is very strong, we have a potential to further add capacity also. But we do believe that we can have more than one product in this facility. As I said, we have 4 2KL reactors, and we also have another facility, though smaller, but also can be retrofitted. So depending on the requirement, we will look to how do we scale up if needed. But currently, we look at clinical supplies on Botbal as well as potentially adding some biosimilars and third-party business to the CDMO.
Got it. So sorry for my ignorance, but just wanted to understand this. Given that it is a biologics facility, this entity has scaled up earlier in terms of manufacturing from, let's say, lab to the commercial level, right? And which is where the confidence for this Botbal product, right?
Yeah, so Botbal has already been, given to more than 1,000 patients through their different clinical trials. So there is already the team already has the capability from both, as you said, from lab scale to 2 liters to 20 liters to now 2KL. So they have those, they already have proven capabilities to manufacture this.
Okay, sir. Got it. Thanks, sir. That's it from us.
Thank you.
Thank you. We will wait for few minutes for the question queue to assemble. You can click on raise hand tab on the screen. I request management for the closing remarks, please.
Thank you for today's conference call and your active participation. We look forward to interacting with you in the next quarter. Thank you.
Thank you very much to Zydus management team. Ladies and gentlemen, on behalf of Zydus Lifesciences Limited, that concludes today's conference. Thank you for joining us, and you may now disconnect your lines and exit the webinar. Thank you.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.